Welcome friends to a brand new episode of Building Blocks. Today it's a pleasure to me to have here with me again Mr. Bhupinder Singh from RBC. There are people, if their credit score, because I hear a lot of time their credit score is fractured or it is less. So what are the options at RBC for those kind of people?
Okay, for them, for those kind of client, we had to first establish what the reason of their credit bruise.
Okay.
When we sit with the client, we see their late payments or collections, what the reason for those collections. So certain time the credit score is below 620 or 600 points, which we cannot do the mortgage. For that time, we use our alternate mortgage solution within RBC. But at the same time, we park the mortgage only for 1 year over there, say for example, through Home Trust or Equitable Bank. But at the same time, during that meeting, we tell the client how they can fix the credit. Usually they use more than 50% of the limit and they're making minimum payments that damage the credit. So we educate them. So over the period of time, when they fix their credit, by the time 1 year is renewal is coming up, that time we bring back to the RBC. And this is the way client is happy in a way that they able to buy the house first of all. Secondly, their credit is fixed over the period of time, 6 to 9 months, and then they can come back to the A lending side in RBC.
So the mortgage will be done by RBC, but you do have some partners in your B lending channel.
Within RBC, we have alternate mortgage solution. So it's a B lending side within RBC under the umbrella of RBC.
So I will be dealing with RBC, but internally you will be mapping the mortgage.
That's right. So we will be point of contact for all those kind of transactions, and we take ownership. Though the mortgage is placed outside RBC, say for example, Home Trust or Equitable Bank,
right?
But ownership is RBC on that.
Okay. So there are people who do proposals and they have done proposals a few months back. Now, are there any solutions for those kind of individuals?
Yes. So it's very important. I'll give you one example as well. The important is what was the reason for proposal? Sometimes clients collect the debts and they say they don't want to pay it and they go for the proposal, which shows their intention, which is a wrong thing.
Right.
So for that, banks doesn't support those kind of behavior. But again, for them as well, we have alternate channel that for at RBC side, when the proposal or bankruptcy is discharged for 2 years and we see the client establish their credit for 24 months again, only then we bring back to RBC. Otherwise, if we go to B lending side, even the discharge happened with 1 day only, we can still do their mortgage. Now, just want to add one example over there. Once in my career, I did mortgage for a client with a less than 20% down payment, and they had the bankruptcy on that. And insurer approved the deal, RBC approved the deal, and how we managed to get that one, we find out with the client what was the reason for proposal. The client told us that he had a car accident, and his advisor told into the bankruptcy people that put the proposal if they come back to your assets and then you're saved. This was kind of not a good advice to them. And with the whole reasoning, we told the insurer no bank lost any money like in the past, and this was a bad advice which client got, and he has forced to get into the proposal. The insurer bought this argument and they approved the deal within less than 20% down payment. So in all this process, we want to see that what the intention behind the proposal or the bankruptcies, which is very important.
And again, alternate lending channels will be there.
They are always there for us. As long as client is putting 20% down payment, even client score is 480, which is very bad score, right? They can still manage to get the approval for them.
People who are into bankruptcy or did in past and less than 20% down payment, so it's the same answer to those?
Yes. So if they're putting less than 20% down payment, but they did the bankruptcy in the past, income-wise, they are a fully qualified client. During that bankruptcy, no bank lost their money. So then RBC support those applications, and at the same time, insurers support those applications as well. So again, as I'm repeating it, intention for proposal or bankruptcy is very important behind the scene.
So yeah, so bank wants to ensure that people go through bad times, but there should be a genuine reason.
That's right. It's all credit worthiness, right? Yeah. They want to see that if client is asking credit, how much is worthiness is.
So if they are self-employed and then it's been less than 2 years, so can they get a mortgage and lending? Okay,
so here is 2 things from here again. For all those discussion, our alternate channel is always there to support those applications. However, sometimes what happens, client is working as say in IT, as employed for last 3-4 years or 2 years, and now they became self-employed, right? So we see in their career or in their industry line how much experience they have. So let's assume in past they were earning $150,000, $100,000. Now they became 6 months back, they became self-employed. Now they should, initially for 6 months, they showed only $20,000.
Right.
So we use their previous 2 years income as average to see that how much their earning capabilities are.
Okay.
And then we ask for exception. As long as client is keeping themselves into the same industry or same line, then RBC gives the exception for those kind of clients.
So what I'm hearing is that if a person is in regular IT employment or some other
For
field,
example, that's right.
and then they switch to contracting position,
That's right.
and it's only 4 months or 3 months, still it doesn't mean that they can't get.
They can still get a
borrowing.
mortgage. And surprisingly, what I did a couple of months back, I did a mortgage for the client. She was into the IT and she became self-employed only for 30 days when I took the application. So what I did, husband income was huge as well. So what we did, whatever earning they did on the last couple of years, we average out, use only 25% of that to show to the insurer we are not using 100%, using 25% only, and that was with 5% down payment mortgage, and insurer supported that deal as well.
Correct. Excellent.
So sometimes clients doesn't know the whole situation and they just assume that mortgage cannot be done, right? So my suggestion to all those clients are discuss with their professional, their banker or respective banker or with me, and we can educate them, we can tell them what the chances are and how we can pull those approvals for them.
So for those kind of people who have a lot of cash income, how does it work?
Yeah, so within RBC we have a program which is called Alt A program, where we use a gross income.
Okay.
So for the condition for those programs are client has to put at least 35% down payment. If they put 35% down payment, let's assume their gross business income is $200,000, but on the paper they show just only $40,000. So whatever income they show on the paper, on the notice of assessment,
Right.
we can multiply by 3 to do their gross income to make them qualify. That's a part one. Within RBC, we have which is called stated income program, which is supported only for the self-employed people, not for the employed. And other way is if the client is not showing much income, and we have an alternate channel within RBC. And there is another program which is called Genworth program, which is called Alt A program. What they do, if the client has a grocery store, in the grocery store there is lots of cash income involved in that.
Right.
So as long as they are putting 10% down payment, Genworth, now the new name of Genworth is Sajan, so they support those kind of application. They want to make sure if that component of income is a cash income which cannot be verified. Like if anybody who's in a IT business or trucking business, they get their income into the business account statement through checks. There is no cash involved in that. But into the grocery stores, like gas station, those are people who have a cash component of income. So those clients goes under the Sajan's Alt A program.
And so can you just again remind me about that 35% program? So if person has 35% payment.
So if either they are doing a refinance of the mortgage, the equity is 35%. So we can go maximum loan to value of 65%, or they are buying a property with 35% down payment.
Yeah.
So let's assume husband, wife, one is employed, one is self-employed, or both are self-employed. Their gross income is say 150 each.
Okay.
And we can see from their bank statements, they're getting $12,000 to $15,000 per month in their deposits. But when we see their notice of assessment, because they have incorporation, they issue a T4 to themselves, and they show only $45,000, $50,000. So whatever income they show on the notice of assessment under the line 150 or 15,000 in current days, we can multiply that income by 3, supported by the business bank statements. The client's earning capability is higher. They are showing less income, but since they are putting 35% down payment, within RBC, we have a program for that.
If a person needs a private funding or a second mortgage, how all of that works and what is that exactly?
If the client has already a mortgage on his property,
Right.
and they want say 150,000, 200,000, or say 50,000, 60,000. So within RBC, we have almost close over 20 lenders, and few lenders are as a private lenders as well. Again, the phase for the client is RBC. We are taking ownership of all those transactions, but we will arrange those funds from the B lending side, the private side for the clients. So those are the time being arrangements for the clients. During this whole process, we try to win the confidence of the client on RBC. Down the road, when they want to consolidate everything into one place, they can come back to RBC into the A lending side. So answer to your question is, if they need private funding through RBC alternate mortgage solution, we can provide those one. Good part of this is, let's assume the same client goes to the street to some broker. So lender is charging lender fees, broker is charging their broker fees as well.
Right.
Here, the client is saving because there is no broker fees. We as RBC, we are not charging any fees to the client. Our intention is to build a relationship down the road. Lender, whoever charges the lender fees, client has to pay that one. But broker fees, we don't charge anything. And once it comes to maturity or the client is qualified, we bring back to RBC. The client is saving almost broker fees on that.
And can you throw some light on second mortgages as well?
And what
second,
term?
So second mortgage, what is second mortgage on our property?
Well,
Suppose that there is a bank who has funded a
Yeah.
mortgage, a primary retail bank, one of the big fives.
Yeah.
So second mortgage, can another bank come into picture and have a second?
So all the banks, they cannot go into the second mortgage.
Okay.
So how this work? Let's assume client has a mortgage in one bank,
Right.
a lender bank, and they come back to us that they have lots of equity, but their bank is not approving for some reason. They don't have the product, or could be any reason. So those kind of clients, we cannot go in the second place into the mortgage. Mortgage is our first priority.
Okay.
So what we do, we involve our branch network for them, and the client can apply secured line of credit against the house.
Okay.
So mortgage can stay on the top on the title, and the secured line can go on the second. But if the same with the home line plan, but home line plan, we have to be number one. So when the mortgage is somewhere else, we involve a branch network and we ask them to do the equity line of credit as a secure line of credit. Once the mortgage come on maturity to the other FI, we discuss with the client and we bring back to RBC, consolidate everything into one place.
So it's
So
more,
it's possible.
yeah, it's more tool. Second mortgage is a tool to get refinancing done and
Correct.
take some money out of your asset.
Yeah, exactly. If I had just the same example, if this client doesn't go into the equity like a secure line of credit on the second place, they will go outside and they will buy a private funding, which is quite expensive,
Right.
and they have to pay lender fees there as well. Here, equity line of credit is prime plus 0.5%. Secure line is prime plus 1 or 1.5%, which is technically quite cheap rate.
My mortgage is with some other bank. Can I get a secured line with RBC?
That's
no
right.
issues.
Yeah, the other bank is on the priority first into the title, so we go into the second as a secure line of credit.
But there is no issue with that.
No.
Bobby.
Thank you,
Thanks
sir.
for coming.
Thank you.
And
Thanks
thanks
for
to
having
all
me.
of you for your time today. And I'll see you in our next episode on building blocks. Till then, stay positive. See you. Bye.
Thank you.